Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the market closed at all-time highs. Are we off to the races? Maybe not so fast. Existing home sales showed that the housing market is still very strong, but the median home price is now over $350,000. How much longer can that continue? And what happens when you mix AI and technical analysis in the stock market? If that question intrigues you, watch the recording to the very end. Now let's take a look at the charts. At the time of this recording, it is roughly midnight on Thursday night, and the markets are currently closed, so no futures data to report. If we take a look at the charts, you can see, as I mentioned in the intro, we closed at all-time highs, roughly the exact same level that we closed at back on the 10th of December. So sitting up here at all-time highs, are we ready to break through that resistance area at 470 and take off to the upside? Well, this move is a bit vertical, isn't it? If you've heard any of my recordings, you know I don't like the vertical moves because what goes straight up often comes straight back down. And if we add in the 10-day moving average, you can see that we are a little bit overbought, but not as much as you might think with how vertical this move was to the upside. But nonetheless, it does look like the market may want to try to pause here at the beginning of the week. And on top of that, when we add in volume, that doesn't give you a whole lot of comfort that we're going to break through this level with that recent move, because look how volume just fell off this week. It's a holiday shortened week, so there's not a lot of traders and activity there. Makes sense that the market would drift to the upside, but I think that's probably a little more of a volatile move than a lot of people thought, but on seriously declining volume. So what happens when everybody comes back? Well, we still have a low volume, low volatility period roughly till the end of the year now. So it may be the beginning of the year before we see if there's any sort of a pullback. Can we break through that level before then? It's going to be really interesting to see if the Santa Claus rally comes, or did we already have it? What do you think? Be interested in your comments. Are we going to break through this resistance level in this low volume environment, or are we going to rest here and see what happens after the first of the year? Post a comment under the video. And then when we take a look at where the possibility is that we could go, well, we have to respect the fact that we do have a new qualified zigzag, and that could lead us all the way up to nearly 500 on the SPY. Again, do we break right away, or do we need to consolidate this move first? But that is a potential target because it is a qualified pattern. Looking at interest rates, I wanted to show you the 10-year, and so far that 61.8% wave 4 has held. A little curious to me to see that interest rates have calmed down a bit. We had this triangle in the last recording, and it's kind of morphed into a larger one. Triangles do that sometimes, but when you have a wave 4 right at the 61.8% fib level, my favorite level, I think it's the strongest one, and we go through this consolidation. It's really classic Elliott wave stuff. With what's going on with the recent inflationary data and the Federal Reserve talking about tapering faster and raising rates faster, you would have to assume that we would break to the upside, and that is what the pattern is showing, the 5-wave impulse pattern. But one thing I've learned over the years, these triangles, you have to respect the possibility that they could break either direction. Looking at the dollar, a lot of people were talking about what a bad week it was for the dollar. I don't see it. The dollar's just consolidating. We completed this nice zigzag pattern to the upside here, and once we hit that 100% extension, we've basically just been in a trading range here since that occurred. So I think the dollar is hanging in there remarkably well, considering all the news that's going on and the fact that interest rates are kind of calm. They're both just kind of in a consolidation, wait and see type of a mode. Bitcoin needed to hold that 44,000, that level that we had talked about before, and it did. And look where we have this wave 4 here, right there again at that 61.8% fib level. Pretty strong level. We had a nice basing there right around 48,000, and it looks like maybe we're going to try to make another run to the upside on Bitcoin. Do we satisfy that wave 5 now? It's a pretty solid wave 4. So if it breaks that 44,000, I think we see 40,000 very quickly, and perhaps all the way down to 32,000 if we don't hold 40. But for now, looks like a nice base there, and perhaps we move higher from this point on. Thought I'd update oil with the inflationary data, everything, and then in the last recording, kind of posed the question or the I guess my question is, OPEC really going to cut production, the 400,000 barrels that they said in January? And if not, that could give a little bit of a floor or a boost to the price of oil. And some other people must have been viewing the same way because oil's pretty much gone up since then. So I think there's a lot of people that are doubting they're actually going to go through with the cuts. That was talked about way back when oil was rocketing to the upside, but we've had a pretty good correction since then, moving back to the upside here. So oil remains pretty solid. Looking at gold, you would think that with the inflationary data, gold would be moving up, and it has. Gold has held this 165 area it needed to hold, so it formed a pretty good base as well, also moving up. So these things are kind of starting to line up the way you would expect if you're moving into a higher inflationary, higher interest rate type of environment. So it makes an awful lot of sense. When we take a look at the VIX has come down considerably. We still have a ways to go to get down to our base down here around 15, but big move to the downside as you would expect when you have such a vertical move higher and on very low volume. Low volume, low volatility, VIX comes down. Again, makes sense. A little more sense coming out of the markets now than what we've had over the past few weeks, I think. Now, in the beginning, I also teased you about the potential of AI and technical analysis. And way back years ago, I had created a search dealing with a calendar spread or time spread to come up with candidates of stocks that have dropped and would likely stay in some sort of a trading range. I have a relationship with these AI guys, really smart guys. They're actually traders too. And so I posed the question to them, could they take this search and apply artificial intelligence to it to improve it, make it better? So it was just a basic search with some technical criteria in it, and they added it and put it on steroids. They added over 300 data points to consider, and some of them these are the basic ones: price and volume, indicator values, comparison to benchmarks, data ranking, statistical measures. Basically what the AI is doing is using regression-based models and neural networks. In plain English and very basic, that means that we're presenting AI with a problem, and then it's going through and solving the problem. So it applied all this data. This is what I'm really interested in. What are the results? Does it work? And you can see it does. Basically, we tested this for over 20 years of backtesting data, and it was so impressive we started trading it live on September 1st. So September 1st of this year through the 10th of December, here are the results. There have been 44 total trades, 36 of which have been closed, over an 80% win ratio, over an 86% average return. The amount of a trade is only $338. We try to keep the total risk per alert at $500 or less for our alert subscribers, and the average time in the trade is roughly 19 days. Over that time frame, the cumulative return has been 258%. This is really cutting edge stuff, and I think this is where the future of technical analysis is going. But look at the portfolio. The cool thing about this is when you look at the blue, that's the unrealized part. The orange is the realized positions. So even while the positions are on, there's little to any drawdowns. So very minimal drawdowns, and then the orange is the closed positions. You can see how the portfolio has grown so far. And in September there were 7 positions, October had 11, November 26, none in the first part of December, but at the time of this recording we actually just sent one out today, so we have seen some more. December is usually the quietest month of the year anyway, at least statistically that is true. If this is something that interests you, all you have to do is sign up for TradeFinder. We're going to be talking more about this. TradeFinder is a free webinar that I do every Tuesday night. We talk the markets, we talk trading, we look for trading ideas, and we just released this to our subscribers, so obviously it's going to be a hot topic after the beginning of the year. So love to have you come along and join in some trade finders in the month of January. From that, I hope everybody has a very happy holiday season. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.